One of the most successful entrepreneurs in America over the past 50 years is going public with his fourth and final prediction about a scenario he calls America's Nightmare Winter. You've probably never heard of Bill Bonner, but in addition to owning an interest in businesses all over the globe, he also owns more than 100,000 acres with massive properties in South America, Central America, the US, plus 3 large properties in Europe. Bonner says, we're about to enter a very strange period in America, which could result in the most difficult times we've seen in many, many years. Bonner has made 3 similar predictions in his 50-plus year career, and each one proved to be exactly right, although he was mocked each and every time. That is why I strongly encourage you to read about Bonner's fourth and final prediction, totally free today. It's all spelled out in a free report we've put together about America's Nightmare Winter scenario. Get the facts for yourself. Go to AmericanWarning2022.com to get your free copy of this report. Even if he's only partially right, it will dramatically affect you and your money. So again, www.AmericanWarning2022.com. Welcome to Making Money. This is Matt McCall. Thanks for joining me. It is our pre-Thanksgiving special, pre-Turkey Day, pre-Black Friday, pre-Cyber Monday. So much going on, and there's a lot of stocks that you could be buying right now to play these themes. All that and more coming up right now on Making Money. Again, thanks for joining me. This is Matt McCall. It is the 22nd of November of 2022. I am down here. You can't really tell, well, maybe by the painting in the back, but down in Central America, Nicaragua, enjoying the holidays down here. To my right that you can't see, unfortunately, is the pool and the ocean right now, rocking with some great surf. But back home, everybody's getting ready and traveling for Turkey Day. We have Thanksgiving coming up on Thursday. And just a quick scheduling note, we will not have a show on Thursday because we want you to enjoy your family and friends. And don't worry about the darn stock market at that point. Go enjoy it. Take some time off. Have the nice long weekend if you get lucky enough to have that. And enjoy yourself. And again, enjoy yourself and your loved ones. Reflect and be grateful because that's what the holiday is all about. But we got a big show coming up. I'm going to talk about several sectors that typically come to light during the Thanksgiving season. That includes travel. Includes football, includes food, airlines. So we're going to have a lot that we're going to dive into. And I got 5 stocks related to those trends that I'm going to share with you that it took me the last couple of days to find them. But boy, I got a couple small cap here you probably never heard of that you want to get your pen and paper ready to write them down in a few minutes from now. But before we jump in, let's take a look at the overall market, because obviously without the overall market behind us, you're always going to have a bit of a struggle buying stocks that go up. We saw that this year with the 60-40 portfolio, which is 60% stocks, 40% bonds, having one of its worst years ever. And that, unfortunately, that trend continues. It's gotten a little bit better because we've had the S&P rally. We've had bond yields go down, which means bond prices go up. So we've gotten a bit better, but we are still struggling a little bit when it comes to the 60-40. So let's take a look at the S&P 500 chart. As you can see here, this is the SPY, the S&P 500 ETF. And last week, I drew that white line showing the connection of the lower highs. And I mentioned that we really need to break above that level for a pure breakout of the bear market that we've been in since January. And I'm not saying the bear market necessarily ends that moment, but that will be the first leg of this bear market breaking down and getting ready for a rally higher. We have the markets this morning up about 0.6%. And even though we're below that white line, even though we're below the blue line, which is a 200-day simple moving average, it still is. We're consolidating. Remember last week, after a big rally to a 2-month high, the S&P 500 is consolidating underneath that. That could be a very good sign, because if we look back in August when we rallied up to this level, it didn't consolidate. It shot up and failed immediately. Same thing happened in March. Shot up, failed immediately. So this time's a bit different because we are consolidating. So I think that this is actually very constructive, folks, of what we're seeing right now, the action in the overall market. Now, let's take a look at the QQQs, which is the NASDAQ 100. So that's going to be a little bit more tech-heavy stocks, non-financials in this index. And as you can see here on the chart is a very similar pattern where we have the white line connecting the downtrends, and you have the blue line, which is the moving average, the 200-day moving average, and kind of just consolidating a bit. It doesn't look as healthy, to be honest with you, as the S&P 500, but very similar. Not much has changed since last week. We're about the same levels we were 1 week ago. All right, so that's where we stand with the markets. And just a quick update also on Bitcoin. We have more and more headlines coming out about the contagion around the FTX debacle, alleged fraud over there. And we have Genesis, which is another company, a cryptocurrency company, trying to raise some money, potentially heading for bankruptcy as well. So you're seeing the contagion really spread. And we had the price of Bitcoin fall down around 15,500, a new cycle low. We're right now around 16,200. So a little bit of a bounce off that. But that Genesis news in the last 24 to 48 hours has been really weighing on the overall market. I talked about Coinbase last week being a potential beneficiary going forward. And I still think there is an outcome situation where Coinbase will come out of this on top. That being said, I said last week I wouldn't be buying it here. It was about in the mid high 40s. It's around 43 and 3/4 right now. It did yesterday, I believe, close at a new cycle low, up today about 6.2%, bouncing back, along with Bitcoin and cryptos after that Genesis news that we had yesterday. But again, Coinbase is not something to run out and buy, but it is something that, again, I believe you may want to just keep an eye on. All right, so it's time for the Turkey Day specials. Now, there's a lot to talk about this Turkey Day. And number one in my household, and even down here, this is my third year celebrating Thanksgiving in Nicaragua, football is a huge part of Turkey Day. And, growing up as kids, you had your Turkey Day high school football games. And then as you get older, you played college ball. Then as you get older, I would play the pickup ball at the old field down the street from where I grew up. Now I'm a little too old for that because I'd probably pull a hamstring just warming up and getting ready. But, a lot of football involved in Thanksgiving. And of course, there's the games throughout the day in the NFL. And something that's been a big part of sports, especially over the last couple of years, last few years, I should say, after the federal government allowed states to decide if they wanted to legalize sports gambling, is gambling on football, especially on big days such as Thanksgiving. So I dove through some of the stocks that are related to that. There's the big names such as Penn Gaming, there's DraftKings, there's MGM, there's Caesars. They all have sports books as well. So there's a lot of big names out there. I found a small one, and this company is called gambling.com, and the symbol is GAMB. It's a tiny company, as I mentioned, just under $400 million market cap. But what's fascinating about it to me is the fact that they are already profitable, even though they're a smaller company. And they're not necessarily a pure gambling company. They're more of a marketing company for online sports betting companies and online iGambling companies. And iGambling companies are companies where you can play blackjack online or different poker online. So that's what's called iGambling. So it deals with that as well as sports gambling. To give you an idea of kind of what they do, they have a deal with Maryland, and Maryland just approved finally. It was approved, I think, a year and a half or two ago, sports gambling, but they finally handed out the licenses in the last week. So they're finally about to go live, I think this week, right after Thanksgiving, I believe, or maybe next week, and actually about to actually allow sports gambling in Maryland. So gambling.com went out a couple years ago, and they launched a website called betmaryland.com. And what happens then is they will draw up interest and give you information about the upcoming sports gambling in Maryland, therefore collecting marketing names. And then these companies will pay to have it directed to their websites to gain new customers in Maryland. So it's kind of the middleman of this. And boy, it really makes sense because you're not betting on one sports book or one online gambling company. You're betting on really anybody who's using their services, which a lot of these states, they hand out quite a bit of licenses. And when they do, it's very tough off the bat to try to garner. Why would I go to, let's say, DraftKings versus FanDuel versus MGM versus, whoever it might be? Marketing is going to get me. Marketing is going to get me. So this company helps do that. As I mentioned, they're profitable. Last year, they made 44 cents a share. This year, a bit of a dip down to 25, but jumping right back up next year for an estimate of 57 cents and up to 75 cents a share in 2024. It has a forward PE ratio of 18, forward price of sales right now of about 4. It's a company, as I mentioned, it's smaller. Okay, so keep that in mind. It's not a big company. It's not going to be one that you're going to see come across your ticker all the time. It doesn't have the largest volume when it trades. But look at this chart, folks. As you can see here, it's traded at the best level since early March as of a rally the last couple of days. And it broke above this level of 10, this resistance level at 10. And overall, you can see what it's done year to date. It's actually up slightly. So it's held up very, very well. Whereas DraftKings and some of the other sports gambling companies have lagged. So this is a company that again, aggressive because it is so small. Aggressive because it is in a very competitive space right now. That being said, the financials look fantastic. The chart looks fantastic. So for me, I think this is one you definitely add to your watch list. And again, folks, I should say this every show. You know, just because I say I like this company and I just gave you a lot of great reasons why this company could move higher, it's not a buy recommendation. Nothing here is a buy or sell recommendation. I'm trying to educate you on how to find ideas and sharing them with you along the way. And you must then, of course, do your due diligence to determine if that's something that you want to buy or sell or ignore or whatever the hell you want to do with it. So just put that little PSA out there for you. The next area I want to talk about is travel, because obviously most of us will be traveling to see friends and family. You know, a lot of people fly, but a lot of people just jump in a car because it may be only an hour or two away. So you see a lot of trips via automobile. And, you know, you always see AAA numbers of how many people are hitting the road. You can see the numbers with how many people will be flying. This year's a little different because a lot of people are working from home. So there's been a lot of early travel, people getting out earlier instead of fighting that Wednesday. That Wednesday before Thanksgiving was always the craziest day in the airport. So now you can kind of be a little more flexible, and we're seeing that. According to AAA, more than 5.4 million people are expected to fly from Wednesday to Sunday. That's about an 8% increase over last year and only 2% shy of the number from 2019. And again, because more people are working remote, we've actually seen a lot more people go prior to that. You know, there's a chart out there. Let me show you here real quick. A chart, and this shows just how many people have started traveling already. You can see here these numbers are 2019, 2020, 2021. Of course, this year is 2022, and it's a black line. You see going back to 2017, how many more people are flying over last year on these earlier days and getting very close to pre-pandemic levels of 2019. So that's a really good sign that people are getting out there. Obviously, inflation is making gas more expensive, flights more expensive, hotels more expensive, but people are still out spending and traveling because I think above all, friends and family will supersede the fact that maybe it's a little bit more expensive to fly or drive this year. And according to the TSA, folks, the busiest day on record remains the Sunday after Thanksgiving in 2019. There's 2.9 million passengers. The same day last year, Sunday after Thanksgiving, is 2.45 million passengers. And they're thinking this year it might get probably between that and the all-time record. So again, we're seeing really a bounce back from COVID, which was just a beatdown of travel. Obviously, we weren't allowed to travel many places. So this nice snapback I like to see, and this trend will also really probably likely continue. So within the travel area, there's two stocks I like, and two very different companies, two larger companies. First is going to be United Airlines, UAL, $14.2 billion company. And believe it or not, this year they should see revenue at the best level ever. And, you know, a lot of those numbers I just showed you is why. Another reason why is due to inflation, because prices have gone up for flying. So, of course, you're going to see that as well. But what I like about this company more than anything is the valuations we're seeing right now. It has a price of sales over the next 12 months of 0.28%, a PE ratio of 7.3%. I look back over the last 5 years, that's well below the average for both the price of sales and the PE ratio. And believe it or not, you would think with all the negativity flying around, with fuel prices going through the roof, with inflation making, again, air travel more expensive, travel in general more expensive. Maybe people aren't traveling as much because it costs more to put food on the table. United Airlines UAL stock, believe it or not, I'm going to show it to you 1 second here, is actually flat on the year. That's really amazing to me. Look at this chart. It had a big pull down in March, and a bottom here in October, where it double bottom, but we're right back to where we began the year. So to be able to have a stock that's flat this year doesn't sound overly exciting. However, it is really exciting to me because I believe that when you see companies that can have strong relative strength versus the market, when essentially it probably shouldn't, because again, they're very tied to the economy. And you listen to most people, whether it is or not, they believe the economy stinks. So the fact UAL is held up is a really a huge positive for me. And again, one I think you add to the watch list, and one of my favorite travel companies, and probably my favorite airline stock out there right now. The other company you may not think is a direct play on travel, but that's American Express. And that symbol in that stock is AXP. And for American Express, they have American Express Travel. I have the platinum card, the silver looking one. And I think it's like $700 a year now for your annual fee. I think $695. However, I get that back 2 to 3 times because the amount of money I get for Uber for using for travel, I think $15 a month you get, $100 a year from Saks, which I spend that. You get airline credits. You get to use American Express Travel. You get to use it to go into the lounges when you travel. And I travel a ton, as many of you know, and a lot of times you have a long layover. Maybe your flight's delayed hours. And being able to go into that lounge is a huge benefit. I'm sure you can pay, I think, $50 a day if they have space. But again, the amount that you get, and also free food, free water, free soda, free drinks if you want to drink, free internet. It's really a really nice perk. So this is very highly tied to travel, in my opinion. Very big company, $114 billion company. But again, I look at the valuations, historically low valuations outside of the dip we had in COVID over the last 5 years, trading well below in both price to sales and price to earnings ratios below the average of the last 5 years. It pays a small dividend, about 1.36%. You see the PE ratio at around 14, price to sales 1.9 looking out. And, this stock not only is a play on travel, but think about what else is coming up the day after Thanksgiving and the Monday after Thanksgiving, Black Friday and Cyber Monday. So we have a lot of things coming up right now where American Express could be in the spotlight. And as you can see on the chart here, the stock is not down that much this year. And it's formed that double bottom in July, October, like a lot of stocks that we've seen. It's kind of in no man's land right now. To be honest with you, I think it's got to break above around 160, 165, and then it could probably retest the highs from February of this year. The great thing about American Express is it not only has the exposure to the travel, but also to the retailer as well. And I just mentioned we have Black Friday, Cyber Monday coming up, and I'm about to talk about retail here in 1 second, talk about the numbers that we're going to be expecting in the next week or so when the holiday season kicks off. But also American Express, in my opinion, will be a beneficiary of when the economy turns around. And American Express tends to lean more towards the wealthier individuals. And that's just my opinion. That's not, I don't have the numbers. I'm sure I could find the numbers. I probably should have, but I don't have them. But I often find times, especially in corporations, a lot of corporate cards are American Express. So that demographic tends to come back a bit faster, and they tend to hold a little bit better in inflationary times. And I think that's why you'll see American Express hold up better than some of its peers going forward and have a big turnaround when we see the economy turn around. So the next stock that we're going to take a look at, speaking of retail, let me give you a little bit on retail though here really quick, because I think there's a lot of great statistics out there. The National Retail Foundation, called the NRF, they believe that we're going to see a 6 to 8% increase in purchasing over this holiday season. Keep in mind, if you take into consideration inflation's at 7.7%, that means you're kind of flat. You're really not getting any increased sales because the prices are being reflected, and that makes everything more expensive by 7.7%, give or take. So a 6 to 8% increase, kind of right in line with inflation. That being said, there's a lot of other organizations that are looking for low double-digit gains. So I think it's a very difficult year to try to predict the increases that we are going to see due to inflation, due to the rapid negativity we have around us, due to higher interest rates, due to people having higher credit card levels right now. But then you throw in the positive aspect of it. People love to spend when they're happy and when they're miserable. So we may see that miserableness push up some spending. Last year, the spending came in at $889 billion. That was up 13.5% from 2020. Obviously, there was COVID to kind of post-COVID-ish. So you saw a big bounce there. And according to the Fed, U.S. households have been, they've gone through about 1/4 of their 2.3 trillion that they saved during the pandemic. A lot of the stimulus checks weren't traveling as much, weren't doing as much. So there's still a lot of money sitting there waiting to be spent. And again, Americans love to spend. On the flip side of that, the personal savings rate went from, we had a high in April 2020, again, because people weren't doing anything. We were getting stimulus checks and people were just putting them away. The personal savings rate was 33.8% at that time. That was a high. And that was April 2020. We're down now to 3.1% in September. That's the lowest level since 2018. Even though wages year over year for the last month are up 4.7%. So I just threw a lot of numbers at you, but what it comes down to is we're looking at a situation where it's going to be very difficult to determine where money will be spent and how much will be spent over this holiday season because people are in very different situations. Families with annual households over 120,000, they're planning on spending about $2,760. And that includes gifts, travel, entertainment. That's about double the U.S. average. So again, once you get over a certain threshold, people tend to spend a lot more money. The key here, though, and this is from PricewaterhouseCoopers, the key is that if this number comes in, it's about 15% higher than last year. So even taking into consider inflation, you're still looking at over 7% gain. That's a big, big gain. So how do we play this trend? There's a lot of retailers out there I actually like right now, believe it or not. But I picked one, and this is an oldie but a goodie. This is one that I've recommended in the past and have had huge gains on it. I have no exposure to it right now. And this is ULTA Beauty, symbol ULTA. And if you take a look at this chart, you can see why I like it and why it's been such a big winner for me. This is over the last year, but let me pull you out a long-term chart of ULTA Beauty. This is going back to when it public in 2007. 2009, when we bottomed out during the great financial crisis, this was about $5 a share. It's at 443 right now. And folks, this is a retailer that's a majority makeup, hair care, skin care, that type of stuff. So it's not like they've really reinvented the wheel. They kind of did when it comes to selling makeup and stuff, because most of their locations are very big. I think they're above 10,000 square feet, if I'm not mistaken. And, they have a huge selection. So you walk in there, it's like a superstore. They have places where you get your hair done in there if you want, get your makeup done. But ULTA Beauty has always been a big favorite of mine. Over 1,300 stores, and they have the partnership with Target as well. The makeup sales, as I mentioned, make up about 43% of all sales. This is last year. Hair, skin, and fragrances make about 20%. And then there's body and bath products as well. As I mentioned, get your hair done, some makeup there as well. That makes up the rest of the sales. $22.8 billion company. And again, we just saw this chart, but let's take a look at this chart again. Up 7% year to date, trading very near an all-time high. Boy, oh boy. Who knew makeup was recession-proof and inflation-proof? Clearly it is. And all that being said, the valuations are still below the 5-year averages on a PE ratio and a price of sales. The forward PE ratio is 19, and forward price of sales is 2.18. So still, not even with this great outperformance, trading near a high, it is not at a level that's like, oh boy, we got to get out of this because of high valuations. So that's pretty amazing, to see really how well it's held up. So that's my play if you're looking for something in the retail space. Now, that's 4 so far. So I got one more for you. And there's a lot of other things we could tie to Thanksgiving. One thing in my family, when we have Thanksgiving dinner, even Christmas dinner, any type of holiday or the other, it could be a big Sunday dinner. You usually sit around the table afterwards and you BS. Talk about all different things, sports, politics. Usually I hate that part. But we could have a very contentious conversation at Thanksgiving meals this year. Going from people soaring inflation prices, which leads to politics, which has just been divisive in our country, to money, being with the word economy is right now, even to arguing your favorite or least favorite sports team. So all that being said, you're probably going to be eating a lot too, and you're probably going to need a drink. So I was going to do a company that is related to alcohol, but I dove into some of the food here, and I thought I'm going to take a little bit of unorthodox idea here for you. But let's talk about food prices here first before we get to that after dinner conversation. Price of turkey is up 23% year over year. Eggs 43, butter 27, potatoes 15, gravy 14 and a half. The seasonings 13%, rolls 13 and a half. Fresh fruits and veggies up 6.5. That's according to Data Assembly, and they estimate because of all that, the price to serve a Thanksgiving dinner for 8 to 10 people is up about 17.8%. It's a lot of money if you're putting together a dinner for somebody and you're responsible for doing that. But I tell you, those numbers tell you one thing: eat more fruits and veggies because they've gone to least and are the best for you out of everything on there. Then there's the American Farm Bureau Foundation. Their estimate is that a Thanksgiving meal for 10 people would cost about $64.05. So it's about $6.40 per person. That's up 20% from last year. That seems low. That seems low to me. And apparently that includes turkey, stuffing, sweet potatoes, rolls with butter, peas, cranberries, a vegetable tray, pumpkin pie with whipped cream, coffee, and milk with plenty of leftovers. That seems very inexpensive, honestly. I just don't see that being realistic. I find that hard to believe. But I guess what you take from this is, according to them, it's up 20% over last year. The other numbers I looked at from Data Assembly, datassembly.com, is up 8% year over year. So the point is, we're up about 20% year over year with the cost of putting together a Thanksgiving meal. So there are ways to play this. Again, I could have went to the alcohol aspect of it, but I didn't. I wanted to go to the aspect of taking back a step. And this is the iPath Bloomberg Livestock ETN. And an ETF is an exchange traded fund. An ETN is an exchange traded note, which means it's a bit different because this tracks an index that invests in two livestock commodity futures contracts, lean hogs and live cattle. And they don't have one that tracks anything when it comes to poultry or turkey. So I went with, the hogs and the cattle, which, a lot of times that you'll have ham, mixed in with the turkey. I know my family does, and somehow get bacon in there involved somehow. Maybe it's in the stuffing. So you get some hogs in there as well, or at least Thanksgiving morning breakfast or the day after breakfast, get some bacon sizzling on there on the grill. So this is an interesting play because it's very, very concentrated on two different futures contracts. But look at the chart here of cow. As you can see, it closed last year around $38. It's at $40.40 right now. If it closes here today, it'd be the best close that we've had since the end of March. So it's been doing very well. And I believe that we're going to continue to see livestock go up higher, partly because the prices are getting higher for that because the supply is an issue along with higher demand, but also the feed that goes into the livestock, those prices are going higher, which then increases the price of the livestock itself. So this is a very outside the box way of playing it. But again, you look at how this is done versus the overall market, and people are always asking me, how do I diversify my portfolio outside of traditional bonds and stocks? Because again, the 60-40 portfolio, which is 60% stocks, 40% bonds, is on pace for one of its worst years ever. Meanwhile, we take a look at something such as cow here, and this is a great diversification tool. It's up 7% year to date. So maybe you start thinking outside the box. Again, nothing is a buy or sell recommendation, but there are opportunities out there, folks, to diversify your portfolio without just a traditional stocks and bonds. There's a lot of things out there. And maybe I'll do a show on that at some point in the next month where I kind of look at some alternative investment products, whether they be ETFs or other things that we can take a look at, because I think a lot of times we forget about them, and slowly and surely they are great diversification tools for your portfolio. But today was all about Thanksgiving. I want to tell you, I won't be at my parents' house this year. I'm down here in Nicaragua, but you always had to take something and say what you're grateful for and put it in. And, I was always a jokester and said something funny, but always at the end of the day, thankful for health and happiness for myself and my family. So I want to say the same thing to everybody out there. I'm grateful for everybody who tunes into the show on a weekly basis. Anybody who has supported me over the last decade plus of doing this work. And thankful to my team, who honestly is the best team in the world when it comes to this. They put up with me on a daily basis, so they must be pretty amazing. So I want to thank the team out there who makes me sound, look good, and we're only going to get better, folks. But again, thankful for everything that you've done for me throughout the years. Keep watching. We're going to continue to get better and do better for you. But again, the three pillars of this show are to educate you. We want to have fun. And then, of course, we want to make some money. And I think 2023 is going to be one hell of a year. So let's get ready for that third part I just talked about. But go out there, spend some time with your loved ones, spend some time with your family, be happy, be grateful. We're taking off Thursday, as you should as well. We'll be back Tuesday, ready to rock with a new show. Thank you so much for watching. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.